Monday, traders. Look, the big news over the weekend is obviously what happened in the Middle East. So we finally saw Israel retaliate back to Iran. Now, that retaliation was actually a measured response. So Israel only targeted military facilities in Iran. They did not touch any of the oil reserves, and they did not touch any of the nuclear facilities. So it was actually a low-level attack. It looks like there was limited damage done as well. So Iran did not respond back as they threatened to on this Israeli response. And the simple fact is because it was a measured response by Israel, and limited damage was done. So we've actually haven't seen the fears in the market and the world that this might break out into an all-out war between Israel and Iran, and potentially even drag the US into it. So we've seen actually a de-escalation of geopolitical risks over the weekend. Okay, so what does it all mean for markets? So let's look at gold first. Okay, so on Friday, gold actually it didn't make a new record high on Friday, but what it did do is actually did have a record weekly close. Look, so that is a positive. But look, one of the things that has driven gold a lot higher and above 2,700 has been these geopolitical risks, and the fact that gold is a safe haven. The fact that now we're seeing those geopolitical risks de-escalate, we're not going to see that support for gold, now at the moment. Gold has opened lower on the open here on Monday already, down 0.5%. And the other big thing to note about gold is that recently it's actually ignored what's happened with the big spike higher in US bond yields. We've seen US 2 yields back at 4.1%, and we've also seen US 10-year yields all the way back up at 4.25%. When you see big spikes in bond yields like this, it generally weighs on gold. With the big spike in bond yields, we've also seen the last few weeks, a big move higher in the US dollar across the board, and that generally also weighs on gold. So what I would suggest now with this de-escalation in the geopolitical risks, that gold potentially now can't ignore what's happening with US bond yields and also with the US dollar. So look, I certainly would not be chasing gold fresh long up here now, and potentially, we have a chance for a bigger retracement and lower levels in gold. So potentially I'd be looking at selling gold up around these levels with a stop above record highs. Look, the other market that has been impacted by the de-escalation of the geopolitical risks over the weekend is crude. Crude has opened Monday, dropping 5% already and back below $70. Crude certainly has been, a pretty popular long for the market. So look, I certainly wouldn't be rushing in buying this dip in crude. Look, I'd be letting this play out, this move at the moment, and let a lot of, I suppose, the weaker longs getting washed out before looking to step back into crude longs. Okay, so moving along. Last week was a pretty quiet week in markets, not a lot going on, but that all changes this week. There is a lot going on in markets this week. So if we look at US markets first, now third quarter corporate earnings season is in full swing. So we get 5 of the 7 big tech, the Magnificent 7 tech names reporting earnings this week. And that starts off on Tuesday with Google. Now, we saw last week with Tesla when it reported earnings on Thursday. The Nasdaq was actually trading down at the lows for the week and was under pressure. Tesla came out with good earnings. Its stock actually went up over 20%. And that took the Nasdaq and S&P index back up and supported those indexes. So certainly if you are trading equity indexes, specifically obviously the Nasdaq and S&P, you need to be on top of when these earnings results come out, because they will move markets. Especially when Apple and Microsoft report. These are $3 trillion companies now. So, big moves there will certainly impact, the equity indexes. Okay, in the US also, it is a big week for top tier economic data. On Wednesday, firstly, we have US third quarter GDP being reported. Now, the expectations there is that for that number to come out around about 3%, which is a very, very good number. But there is a risk that it actually may come out even higher. The big theme that we've been talking about a lot in markets is this, sharp rise in US bond yields and also the US dollar on the back of that. So if we see a very good GDP report, no doubt we will get the next leg higher in those US bond yields, and we will get a sharply higher US dollar on the back of that again. So certainly, if you're trading currencies, Wednesday night you need to be watching the US GDP report. And no doubt, maybe even the market may even start, trading, bid on the US dollar side going into the report. Also on Friday, another top tier US data point is the non-farm payrolls. US employment numbers come out. Market expectations there is for 140,000 on the headline. Unemployment rate to stay at 4.1%. Now, last month we saw an absolutely fantastic number for US job data, where it came out, plus 250,000, and that was partly responsible for, the big jump up in US bond yields. So look, the risk again is probably for another good number, and again, as we've been, talking about, is that this will be supportive of US bond yields. And potentially, the market may start pricing out, aggressive Fed rate cuts. Okay, so locally, we've also got some data out here in Australia that is very important, and that is third quarter CPI. So that only comes out 4 times a year, so it is a massive focus for both the market and also the RBA. Here in Australia, we haven't got inflation down to target yet, and we've got a very solid jobs market. So at the moment, we're not looking at any rate cuts, and certainly if this CPI number doesn't show further improvement in inflation, and if it comes out even slightly above expectations, we potentially may be talking about a rate hike in Australia. Certainly can't rule that out. Look, the Aussie has been, smashed lower in the last few weeks on the back of the, stronger US dollar. We're trading down towards 66 cents. I'd suggest I wouldn't be selling the Aussie aggressively down at these levels before this CPI number, because if the CPI number does come out, as a solid number or slightly above expectations, certainly this is going to be a massive positive for the Aussie. Okay, good luck with your trades to start the week, and we'll check back in with you shortly.